So joining me now to talk more about the market open is Jeff Krumpelman, Chief Investment Strategist and Head of Equities at Mariner. Jeff, it's great to have you on the show this morning. And as this session starts, what do our viewers need to know about the landscape?
Well, just get ready. And you've heard me, I think, quite a bit talk about our thesis for which has been clear air turbulence. Expect decent returns, healthy returns through end of year and into next year. But we're going to hit these air pockets that make us feel very uncomfortable. And you just raised the issue that's the topic du jour. We thought tariffs were all behind us, and I think it's just a lesson that, they're really not. And we're going to get these issues that arise that's going to give us psychiatric moments, and it's going to cause pullbacks. I do think that going into Friday, the market did look tired after quite a surge off of those lows back in April. So I'm not surprised at all to see, pullback and chop as we push through these issues. But what I would tell viewers is the fund still remain very constructive to take us to higher highs as we move through 2026, despite all these wall of worry concerns.
Look, we've had 30-plus record highs on the S&P 500 this year alone, and a more than 30% rally here in the back half of the year since that April low on the back of trade concerns, most notably between the U.S. and China. But you referenced fundamentals, and of course, as trade does remain in the background, we know that earnings is taking center stage. Mixed responses from investors on the bank results this morning. JP Morgan Chase, Citigroup, Wells Fargo, Goldman Sachs, all out with reports. What is your expectation for this earnings season?
I think we're going to have a good earnings season. You have a economy that's growing roughly, I think the latest Atlanta Fed model was around 3.8%. You have real wages that are rising, healthy capital spending for sure. And so I would expect a good Q3. I do think, and earnings should be robust, and earnings numbers are coming up. So that's a positive. I think we're going to get somewhat of a slowdown in the fourth quarter, which we need to be, prepared for. And yet, I think that's more chop. I think we've got good news coming as we move into 2026 via significant tax refunds in Q1, which will help drive consumer spending, write-offs that will be accelerated via the tax bill for capital investment. That will buoy, and I think will re-strengthen as we go into Q1. Mm-hmm. But I think the earnings season will shape up pretty nicely, and I think the bank earnings tell a pretty good story. If you look at JP Morgan and Citigroup, looks like we've had good loan growth, good capital market activity. I don't think there's much to really, nit at on the part of the bank earnings today.
Jeff, we'll leave it there. Thanks so much for joining us this morning. Jeff Krumpelman, he's a Chief Investment Strategist and Head of Equities at Mariner.
Thank you.